Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day. We're counting down to the next VRIC, January 21st and 22nd. There is a link in the description where you can get your tickets. And today's guest is an economic geologist and the co-editor of Exploration Insights. It's Brent Cook. Welcome back to the VRIC channel.
Thanks. Good to be here.
So I want to talk junior mining with you, and let's start with a broad overview of the junior mining space. What are some of the main things you think investors should be paying attention to in the sector as we sit here today?
Well, obviously it sucks. It's been a poor market since at least the first of the year, and as the summer rolled in, it got worse. Basically, there's very little interest being shown in the junior mining sector unless there's the indication of a discovery, basically a discovery drill hole. So that's what's working. What's not working are legitimate companies adding value through the drill bit or through economic studies and that sort of thing to existing deposits or expanding their deposits. So that's kind of what's not working. And that's probably the place people should be focusing, because I do suspect we're going to see this bear run come to an end this year, and now is probably a good time to start looking at the projects that are going to be of interest to major mining companies.
I've spoken to a few CEOs in the space, and they said one of the challenges they think the sector is facing is a lack of proper promotion, of proper marketing, of basically getting the message out to potential shareholders. Do you see that as an issue in this age of social media? Do you think that's an important factor to take into account?
It's certainly an issue, getting the message out, but the underlying issue, I believe, is nobody really cares about this sector except those of us that are intimately involved with it and have been with it for years or decades. The major institutions, investment funds and that sort of thing, it's too small to be of interest. And when Tesla and Apple and that just continue working and working, what's the incentive to go buy something like Go Gold or whatever? There's just not that incentive. And so getting the message out, I'm not sure how you really go about doing that, besides, shows like yours, the Cambridge Investment Show, the New Orleans Investment Conference, those sorts of things. That's the only way I'm seeing to get the message out. I mean, I'm on LinkedIn, right? And most of what I get from LinkedIn is people trying to promote their own company. They're promoting it to me. I know the company. I don't see a lot of new people there.
Yeah, that makes sense. And I do want to touch on the broad market briefly and how maybe things might shift, because obviously, as you're saying, we're seeing these big tech giants continue to perform very well. It seems like there's some complacency that this is a tech bull run that's going to last forever. I've spoken with a lot of people who believe things are going to shift, that eventually reality will set in, and this isn't a sustainable situation. Perhaps at that point, if we see a big correction in the broader market, that people could then turn their attention to commodities, maybe starting with the ETFs for institutional investors. Maybe that attention could get to the producers and eventually trickle down to the junior miners. Do you see a scenario like that potentially unfolding?
Well, that makes sense, right? But one thing I'm noticing in the world is reality doesn't really matter much anymore. It's a weird world out there. We've seen lithium take off. And I think we've seen a company like Ivanhoe Electric, which has, Friedland behind it. I mean, if you want to know who promotes, that's the best promoter in our space, I think. He's got over a 2 billion market cap. Most of that, for instance, is based on a deposit in Arizona, Santa Cruz, I believe it's called, which it's deep, it's low grade essentially. There's a lot behind it. It's a great location, but the company that has the up dip portion of that has a market cap of a tenth that, and Arizona Sonora Copper. So it's it's very difficult out there to get your message out beyond someone like Friedland or
Right.
a fantastic drill hole.
Yeah. So when it comes to approaching the space as an investor, a lot of these junior mining companies, the CEOs can be pretty accessible. You can reach out to them in a lot of cases. What do you think are some of the key questions that investors should be asking junior mining company CEOs in the current environment?
Well, in the exploration spaces, which where Joe and I focus in exploration insights, the the most important thing to me to start off with is, does the company, does the management understand what they're looking for? And that seems pretty basic, right? We're looking for porphyry copper, for instance, but there's more to it than that. You need to know what you're looking for actually looks like in the drill hole and the data you're gathering. Is it working, or is your thesis not working? And to understand that, you've got to have a sense of what's the capital cost going to be to bring this into production. So what tons and grade do you need to see to validate your exploration hypothesis? And then what is it going to cost you to get there? And how are you going to do that, more importantly, at increasingly higher share prices, because you've got to keep raising money? Those are the sorts of questions I think you need to be asking the CEOs.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday, and I love writing it. Hit that link below to subscribe. All right, back to the interview.
When it comes to the cost of capital, do you think higher interest rates are having an effect on that, meaning that potentially when looking at economic assessments at a PEA, a pre-feasibility study or feasibility study from a few years ago, do those numbers need to be adjusted due to the increased cost of capital? Do you think that's putting pressure on some of these companies?
Yes. The short answer is yes. Next question.
So let's talk about specific commodities now and where you see them positioned. And we'll start with gold. How do you see gold where it currently stands, and how it's going to develop moving forward here?
I think overall gold is cheap. It's got to do with the US dollar, which is holding up pretty well. But what I find interesting is that a number of companies, or not companies, countries, are adding to their gold reserves. And I think that was in some degree instigated by our confiscation of the US's confiscation, or at least freezing of monetary assets of Russia, and potentially China and that sort of thing. So the US dollar reserves that they have, they're looking at and thinking we should get into something that the US can't play around with. So I do see countries coming in, but in terms of the ETFs and general market, that hasn't picked up yet. But I do expect that will happen. I expect we're going to see over time the value of the dollar decline given the interest rates and the debt we're looking at. So I think gold is a good place to be, and especially most of the major gold mining companies need to replace what they're mining in order to stay in business, and they're having a difficult time doing that. So they have been and will continue looking at advanced projects held by junior or intermediate sized companies. So that to me is sort of the place to focus, is on companies that are actually adding value to a deposit that is going to be worthwhile to a major company.
And how about silver? Do you expect it to perform in the same way as gold? I know some people are debating that it's becoming more of an industrial commodity as opposed to a monetary metal. How do you see silver?
I see silver the same as gold. I'm not a silver bull per se or silver nut. Um, I think it comes down again to what are the economics behind the deposit you're drilling out? Does it make money or not? I mean, a company like, call it Vizsla, they're drilling out a nice high grade deposit in Mexico. I think that's something that a major silver mining company or gold mining company will be looking at. Mexico's got its issues now, but most places do. Rupert Resources in Finland, that's another deposit that I think a major company should be and probably is looking at taking over. That's not a silver deposit, but I think I look at silver the same way as look at gold. What's the margin of this deposit? Is it high margin or is it break even?
And let's shift to copper. How do you view the current setup for copper? Obviously, a mineral that's very in demand for electrification. You have organizations like S&P Global saying we're going to see an unprecedented shortfall of copper supply to meet the needs of the proposed energy transition. What are your thoughts on copper?
I think that's a legitimate narrative. This year, maybe next year, it's in balance. It depends on who you listen to, but looking further out, the major copper mining companies face the same dilemma the gold companies do. They need to replace what they're mining. I mean, for instance, as an example, the Big M copper mine up here in northern Utah, we're essentially on a global basis depleting one Bingham copper mine per year. And we're not finding 1 billion or one Bingham copper mine a year and putting it into production. Right now, if you make a major porphyry copper discovery, depending on location and such, you're looking at 10 to 20 years before that even comes into production. So copper, in my view, is a really good place to be investing.
And how
Early
about you?
stage copper deposits.
Right. And how about uranium? Obviously, we're seeing sort of a new nuclear renaissance. Many countries and governments are embracing nuclear energy, and rightly so, as the cleanest, safest, most efficient form of baseload power generation in nuclear energy. Um, Uranium, obviously, the price isn't high enough to incentivize a lot of these projects to come online, a lot of mines to restart. How do you see the current setup for uranium?
What you said makes a lot of sense. I mean, nuclear power has its issues, but in my view, it is the most logical green energy out there. That should be what we're shifting to. And I think that's going to happen. We've seen Sweden now change their mind. Hopefully someday Germany will come to their senses and change their mind on their nuclear power. So yeah, I think uranium is a great place to be. I want to be in companies that have deposits or mining deposits that make money at current $50 or so spot market prices. There's no shortage of uranium out there, but in the ground, drilled out, ready to go. But it requires higher uranium prices. And I'm not, it's going to be hard to do because there's a lot of sitting in the ground uranium that is ready to come right on board. So if I'm going to get into a uranium company, for instance, I like Energy Fuels, they're mining, they're making, some money on it, but they've got tons of uranium in the ground that's ready to go drilled out. That's the place to be, I think.
And let's switch to more the investment side and looking at jurisdictional risk. I'd like to get your view on this because speaking of uranium, we recently saw a coup in Niger and the uranium equities in that part of the world plummeted a lot. And so I guess a lot of people are thinking how to approach jurisdictional risk. Is it better, in your view, to stick to so-called legacy brand countries where there's less chance of that happening, places like Canada, America, Australia? Or do you think it's a matter of being geographically diversified? Because with a place like Canada, you can see ESG red tape sort of risks where a mine can take a really long time to come online. So how do you balance that?
I think just how you said, you want to be in countries like where they have uranium and have some sort of rule of law and mining permitting process that you can understand. And that would be Australia, Canada, US, Namibia. Those are the ones that come to mind. But yeah, I would avoid places like Niger. Kazakhstan, I think, is going to continue being, as safe as it is right now.
And the last question I want to end on is, in your many years of experience in the junior mining space, what are some of the biggest mistakes you've seen investors making when it comes to approaching the sector? And how could they correct those mistakes?
This is a very technical and complicated industry. And unless you're deeply involved in it, you don't really have a good feel for all the issues that is involved in your basic exploration. What are the soil samples telling you? What are the geophysics really telling you? What is the drill hole really telling you? And then what are the local issues you've got to deal with? For instance, you can be in a good place in Argentina or a bad place in Argentina, depending on the province. All those issues come into it. And I think what a speculator in this industry needs to do or have is access to someone who understands those things and knows where the issues are, knows where the fatal flaws probably are. And in my view, Joe Mazumdar's letter, Exploration Insights, is one of the best. But also, if you've got, brother in the industry, or your broker's really good at it, those sorts of things, going to the shows like you're going to be in Vancouver when is it, January?
Yeah.
Or the New Orleans Investment Show in October. Going to those sorts of things and talking to people who know the industry and companies that, you can talk directly to the CEO. That's what I think an investor needs to do. They need to understand what can go wrong and watch for that, and what can go right and watch for that. Because I've made really good money investing in something that initially looked good, but recognizing that fatal flaw as the stock goes up and selling there before it collapses, that's probably the best way to make money in this sector.
Very good point. Looking for what could go wrong. I think that's something a lot of investors don't actually take the time to think about. They just look at the bull thesis. So that's a great advice there. And that's also a perfect segue into telling us about Exploration Insight. So for those who want to learn more, what is it? Where can people find it?
Right. It's a letter I started in, I think, 2008. And basically, it's about what I am buying and selling in the sector, although now it's Joe's letter, Joe Mazumdar's letter, who is, a really experienced geologist, smarter than me in a lot of respects. And it's about what he's buying and selling in the market, what he's seeing in terms of the bigger picture. Comes out once a week, a lot of detail as to why he's owned something, covers the news. I think it's worthwhile. I mean, it's monthly charge. If you don't like it, quit after a month. And you got access to everything we've ever written going back to 2008, basically, and it's searchable.
Well, I actually had Joe on the show here a few weeks ago. Super insightful interview. So I definitely recommend people search for that and check that out as well. And I will put a link in the description to Exploration Insights for people who want to check that out. Brent, it's been a pleasure. Thank you so much for joining us today.
Excellent. Thanks for the opportunity.